Hello, today my presentation is on Amazon and how it's risen through the ranks to become one of America's greatest e-commerce sites, if not the greatest. Amazon LLC was started and founded by Jeffrey Bezos in his garage. His parents gave him some capital investment and he was able to start it wisely. As it began, it was an internet merchant of books, but then expanded into a large variety of items. Over the last 22 years, Amazon has made their mark on the e-commerce world by being the fastest growing e-commerce site ever. The company is now worth more than $61 million and has more than 97,000 employees. When you're looking to invest in a company, it's really important to look at where they've grown from. This is Jeffrey Bezos, the CEO and president of Amazon.com. And as he would say, if you decide that you're going to do only the things that you know are going to work, you're going to leave a lot of opportunity on the table. Jeffrey was only 30 when he started Amazon, and as you can tell from that small capital investment that was just a few $1,000s, he was able to reinvest and reinvest until he came up with something much bigger. Although Amazon began as an internet merchant of books, it did not take long to expand into a wide variety of products and services. Within 2 months, Amazon's sales were up 20,000 per week. However, the company continued to cultivate that back into growth. Within the first year of operating, they became a multi-million-dollar company. Over the years, Amazon LLC has become a household name. Currently, the capital structure is that it funds mostly through equity capital, but there is some debt capital, financial leverage, and enterprise value. In December 2015, Amazon's capital structure relied more heavily on equity financing than debt. However, through the debt capitalization increases, the company grew and matured. Now that Amazon has proceeded with that process, debt to capital ratio fell, and it's more closer to peers. In April 2016, the company's enterprise grew over a 3-year period, driven primarily by stock purchases or Amazon shares to stockholders. As you'll see here, the Amazon stock is currently valued at $946.94 a stock. That's a slight decrease. However, when we started this project, it was only at $860. So this is still a great increase within the company. It's a common stock type, and it's sold on the NASDAQ. There's currently close to 2,000 stockholders, and shares outstanding are over 477 million. Although Amazon does not provide a dividend to its stockholders, it does do stock buybacks occasionally. In 2008 is when the market really started increasing for Amazon, and that's when the volume of participants in stock was really started to gain value. So the value of the stock started about $80 to $90 when the first shares were released back in '98. It's now you can see it's over $900. So Amazon's debt was only $3.2 billion in 2013 before a bond offering. When the bond offering happened in 2015, the debt to capital went down to 0.38. And then even further down that is from 0.44 in 2014. Today, the total debt to equity is about 105.83, while the total debt to capital stands at 51.42. Overall, Amazon's debt, which is the average ratio indicating the relative proportion of shareholders' equity to debt and to finance a company's assets, is low. A low debt to equity ratio indicates lower risk because debt holders have fewer claims on the company's assets. Over the last several years, that trend has been decreasing debt. So this is down. Currently in December 2016, the debt was 0.399, which was down from 0.4614 in September 2016. These numbers to me show that Amazon knows how to manage its debt and is a fair company to purchase from. Again, Amazon's corporate taxes showed net increases from 2014 to 2015. So those current taxes increased, and the current number is $1,671. So where is all this money coming from, you might ask? Well, Amazon has a huge expansion of products. So they've acquired many companies in the 22 years that they've been operating. So they've acquired things like LoveFilm, Zappos, Twitch, Alexa, Woot, Audible, Wikia, Egghead, BookSurge, CreateSpace, you name it, Amazon probably has their hands in it. And that leads to a higher stock value and diversity for consumers. So their income, this reflects a lot on the stock market analysis. So their PE growth is 167.57, which is very low considering the relative growth of about 65% altogether. But as I've said, their net income you can see it trending. There are low quarters, there are high quarters, but overall they're almost to 80 billion in revenue per year now, and they tend to manage that well. So, ratios aside, Amazon LLC is considered high and above market average with their benchmarking. For the 9 months ended in September 30, 2016, its revenues increased by just 29%, which is huge. So six times more than most on NASDAQ. Due to Amazon's startup nature, they do not provide dividends, but you are buying into a company that's proven success. So, get to the NASDAQ now. Amazon is a profitable e-commerce website that allows for investment for stockholders. Amazon's market diversity and growth has shown to be very powerful against its competitors, and their stock prices have continued to jump. I can personally say, as an Amazon stockholder, that investing into this company is a great resource to do. So keep in mind all of those ratios we talked about and get out and buy your stock.